Hey everybody, my name is William Lyons and I'm the President and CEO of Griffin Funding, and today I have Sarah Howell with me. Hello. And we are VA loan specialists here in San Diego, but we also operate in the entire state of California and Hawaii, and soon to be Arizona and Washington, which is very cool, where a lot of veterans are. So that's our specialty. And Sarah comes from a marketing background with zero sales experience. Zero, yeah. So she was afraid. But she's been with us a couple years now, and she's become our #1 producer, girl power. Maybe Eric's close to you. Which is really cool, because I think that you don't need a sales background. I think that that's what makes her good, is she's not a salesperson. She just kind of talks normal. She really cares about her clients, and I think they can see that on the phone, and that's why they decided to go with you. And all our Yelp reviews mention her, so it's really cool, and we're blessed to have her part of the team. So, what makes you successful with your clients, you think, just from the initial conversation, gaining trust and rapport, and going over their options? I mean, what's really...
I think that you mentioned it. I just really want to know what is going to benefit them. I really try and dig and just talk to them as a real person and not try to push anything on them. You know, when I get the sense that they feel they're being pushed or sold to, I really try to back off and say, hey, look, I'm not trying to, I want to help. If you don't want help, I'm totally fine with that. Let me know if I can answer any questions or whatever you need from me, and also just really going through all the options, trying to find the best product for them and for their specific scenario. And if it doesn't work, that's fine. Not everything's going to work, and I want to make sure it's a good benefit for them so that I can feel good about putting them into a product. And not that was always, I think, my issue with sales, is I always thought that I was trying to push something like an unwanted product on someone, and that I didn't believe in myself, but I really truly do believe in what we do here, and I believe in the company and you as a leader, and so I think that helps as well.
No, and the VA has strict guidelines too on when they can recoup their costs or recoup their VA funding fee, and sometimes it doesn't make sense for someone to go VA because they have a huge funding fee and they're not going to be in the property that long, so they may not recoup the funding fee that quick. So maybe kind of talk about that a little bit.
Yeah, so there's certain calculations that we do, and we want to make sure it's not it's not too costly for them, and it's going to make sense. And a lot of times we'll question, how long are you going to be in the property? Do you have plans of moving? Maybe, maybe an adjustable might be good for you if you're going to be in the home for less than 5 years. But if they are going to be in the home long term and don't have any plans of moving, we do a calculation for how long it's going to take them to break even on their costs, and that really gives us a new perspective on if it is worth it to them, because all they see is this huge funding fee of $13,000. But if they save so much by going into a lower interest rate or just a better product, then they might make it up in 2 years, and it doesn't matter at all to roll it in.
So just to be clear, like most of our loans are no point, no fee loans, meaning we credit all your closing costs. There's no points, origination fee. We cover all the title, escrow, underwriting fees, all that stuff, so it's no points, no fees. But sometimes if you don't have a service-related injury from the military, you then have a funding fee from the VA, and a lot of times we're not able to cover that funding fee. So you might ask, why does someone choose a VA loan over a conventional loan when conventional loans don't have a funding fee? So just to be clear, we cover, in most cases, all the closing costs associated with a VA loan or a conventional loan. So we'll give you a lender credit, broker credit to cover all your closing costs, title, escrow, underwriting fee. There's no origination fee or points or anything like that. But with VA, there's usually a funding fee. If you don't have a service-related injury, there's a funding fee. And sometimes it's not worth the funding fee, sometimes it is, right? But why would someone choose VA over conventional? To make it simple, VA is usually about a half a point less in rate. So if conventional rates today, let's just say, are 3.75, which are they? I don't know. So, around there. 3.75, 3.875, 4%. Then let's just be easy for math purposes, 4%. You would get about a half a point less with a VA loan. So you would say, well, gee, it's worth it for me to pay this VA funding fee if I'm getting the product, the interest rate for half a point less because of my VA benefits. So I can get 3.25 opposed to 3.75. But there's sometimes where you say, you know, it's not worth it. Let's take it conventional, and I believe we're really competitive on the conventional side as well.
Absolutely, yeah. And another couple reasons why someone might choose a VA loan over conventional is if they have less than perfect credit. The VA is very lenient with that and will still give you great pricing. If you have, you know, certain derogatory events on your credit history, or if your loan to value is over 80%, you won't have mortgage insurance.
So if you have less than 20% equity, it makes sense to go VA. If you had a foreclosure, a short sale, or any effect from the Great Depression or Great Recession, they call it, you know, like most people did. You know, it's only 2 years for a short sale, 2 years for a foreclosure, 2 years on a bankruptcy. So that's really cool that we can help people do that. And we can go up to 100% of the value of your property. We can go over the VA county limit, so there's a lot of cool things.
That's a common misconception, I think, with VA loans, and that I hear is that there is a limit to what the VA will write as a loan, which is not true. You can have a jumbo VA loan. You just have to have enough equity in your home to cover your entitlement.
Yeah, I had a client early on when we first started Griffin, and he actually went into a local VA office to get his DD 214, proof that he was in the service. And the guy in the local office, he said, you know, this company's from San Diego, I don't know who they are, can you take a look at the paperwork? And he looked at the paperwork and said, oh, this can't be done, this loan can't be done. You're getting scammed, they're going over the county limit. And of course, we're not scamming them, and we had them call the VA Loan Center, not just the regular VA center, out of Phoenix. And of course, Phoenix verified that everything was okay, and we moved forward and we closed the loan. But you know, it's just amazing that some people in the VA don't even know you can go over the loan limit.
Exactly.
So what else? What else can we get out of you today?
What else do you want out of me today?
Well, this is Sarah H. We call her Sarah H because we have 2 Sarahs in the office.
There's always a ton of Sarahs everywhere I go.
So, yeah, there's all the Sarahs. And we have 2 of everything pretty much here. We have 2 Erics. So if you see this video on Yelp, or if you're looking at our reviews on Yelp, or if you go to Facebook, and you're interested in just getting a free consultation for a VA loan or a conventional loan or a jumbo loan, what makes the most sense for you, you're more than happy to work it up for them.
More than happy to.
Contact Sarah H. I think it's just Sarah@griffinfunding.com, or
Sarah
call us.
with an H.
Sarah with an H at griffinfunding.com, or the number that's on the Yelp or whatever, 888-721-0003, and just ask for Sarah, and she'll take care of you all over all the guys out there. So
Way better.
all right, thanks for your time.
Thank you.
Appreciate it.